Hey guys, Taylor with GammaEdge here, coming at you with a market recap for April 22nd, 2025. Actually saw a little bit of strength today in the market, gapping higher and pushing higher intraday, something that we haven't seen in a while. So let's get into our pre-market prep and the intraday tools on how we use those to stay in line with the trend today. First place, shall we start market trend model. This is your first time seeing this. This is how we gauge trend and momentum in the market. It's based off the tick index. If you're not sure what that is, feel free to Investopedia that. But in short, it's a way of gauging real-time buying and selling in the market. Tracks the three main stock exchanges, that being the NASDAQ, the NYSE, and the American. The tick index is an intraday tracker. So what we do is we create a time series of that day over day. We call that the cumulative tick. This is that thick white line that you see there. So we were range bound last week. Yesterday, very weak day, linear down day, filter tick selling all day. Just quickly, the filter tick is a measurement of significant buying and selling taking place in the market based off the size of transactions flowing through the tick. So that was a down day yesterday. So you're coming into the session day, there's really nothing to support any kind of bull case on a swing trading time frame. Keep in mind that is different from an intraday 0DT time frame. So that distinction is important because like we saw today, everything could be bearish, but we could still have a move higher. And that was completely reasonable based off of the 0DT structure and what we saw intraday, which we'll get to in a little bit. So again, just recapping yesterday, a bearish down day, filter tick selling. So was not very constructive coming into the session, all things equal. Next, what we do is we go through the SPX options market. Reason we focus on the options market is one, it's inherently forward-looking, so we can understand how speculators are positioned on a forward-looking basis. Two, this is where a significant amount of transactions are taking place in today's modern markets, as opposed to just trading stocks. So by understanding what is happening within the options market, specifically the SPX options market, we get a very good barometer into general market sentiment. And then specific to the SPX market, I kind of just hit on it there, but this is also the largest, most liquid observable options market that we have. So here we are looking at SPXA. If you're not familiar, the SPX has two complexes. The SPXA, which is your longer term, think of this as your cruise ship. This is where the slower moving institutional money takes place. This is your monthly and your quarterly expirations. And there's also SPXP, which that is your daily, that's your weekly, that's your 0DT, smaller than SPXA. So you can think of this as your cigarette boat, as this is where the shorter term speculators take place that are kind of turning over those contracts very quickly. And so right back to the SPXA, the complex was put dominated above and below spot price. You see that we were opening right at 5,200. But nonetheless, just looking at this complex in the context of our market turning framework, which if you don't know what that is, we wrote a newsletter on it last week. You can go to our website, check that out. But nonetheless, market trend model down, SPXA, still a very bearish looking structure. And then here we have SPXP. Again, very bearish looking structure here. SPXP, remember, that's the cigarette boat above and below spot price, all put dominated. So just stepping back from a swing trading time frame, this is not the market or the conditions right now to be putting capital to work kind of on a multi-week basis right now. Reason for that is the trend is lower, puts are dominating the structure. We need to see the market trend model starting to trend higher. We need to see calls coming into the complex. We don't see any evidence of that right now. However, then we come to SPX 0DTE. And remember, 0DT trading, whole different animal from that swing trading one we just talked about, because conditions can be different on any given day. Yes, it's important to understand what the broader overall market conditions are, but that doesn't necessarily dictate what the intraday dynamics are going to be. So that is why we also specifically focus on 0DT. That because 40, 75% or whatever all transactions in the SPX take place in the 0DT complex. So this is the pre-market dashboard. We were implied to open at 5,200. A couple things to note here. Put dominated above spot price, call dominated below spot price. That is a normal structure, so really nothing to note there. A few other important things. So our transition zone, that was from 51.75 down to 51.30. You can think of the transition zone as, well, from a trading point of view, we expect chop within the transition zone. The reason for that is because there is a back and forth tug of war between call and put speculators. Above the top of the transition zone, this is call dominated environment. Below, and there's a put dominated environment. And we developed the delta transition zone is based off the distribution of deltas throughout the option structure. Then we also have a gamma transition zone. So those are kind of key sensitivity points, reference points within the structure. Then we also have something called the drunken sailor zone. And so what the drunken sailor range is, even though we could break the top of the transition zone in a call dominated environment, it could be a very weak call dominated environment to where intraday volume is going to be very important within that region to kind of dictate what price is going to do. Again, the reason for that is because the actual opening and closing of transactions is going to have a lot bigger impact than, kind of market maker dealer dynamics and the moneyness of options in that region. And the other thing that we wanted to note is, even when we got above the top of the drunken sailor range, there was still a ton of air pockets in the structure right now. And so, right, the notable air pocket was between 5,100 and 5,200. Yes, I understand that's a 100-point range, but that is the structure that the market gave us today. That's where the transition zone is helpful because, we understand from 5130 to 5175, that is serious chop. Then a bit above 5175, we are still biased higher. So again, opening above 5200, our bias was to the upside today. We need to see a rejection of 5200, then a rejection of 5175, and a kind of collapse in the market trend model, collapse in the intraday volume dynamics to want to be short. And that is what we will get to right now. That is the intraday price action. So again, here's price action today. We can see, gapped right near 5,200. We have 5,250, 5,300. You can see that these were key goalposts in the structure in terms of where those air pockets were defined. So, 5,250 to 5,300, that was a key air pocket. You can see, price really was contained well within that zone. And right, we're just identifying those zones right here for you so you can see those in the structure. And right, that's not necessarily luck either. Like we see time and time again, price respect these levels. And so coming to the market trend model real quick for today, we can see it was a linear update, basically the exact opposite of yesterday. And we saw a sustained, filter tick buying throughout the session, albeit not quite at the magnitude of the selling, but it was still pretty close. So, using our framework, we opened above the key transition zones. Market trend model was trending higher for the duration of the session. So, that kind of helped us as we eliminated the long side yesterday, helped us to eliminate the short side today. Or yes, there were points and times today where, short may have been the play, but just in the context of the waterfall lower we saw yesterday, like we were not expecting that today because everything was pointing higher in terms of intraday buying and selling. And lastly, this brings us to our intraday volume. I've hit on it a couple of times. This is kind of the key chart where that manifests. This is called the Vol M chart, stands for volume momentum. Very clever, I know, but effectively what this is for SPX 0DT, because remember, said earlier, 40 to 75% of all transactions take place in the 0DT complex. What we do is we focus specifically on volume, and that is call volume and put volume. And so every 5 minutes, we aggregate the call and the put volume. We figure out the distribution of that call and put volume. We find the middle point, which is called a centroid, and we plot that both for the call side and the put side. So every 5 minutes, we're plotting those centroids. We connect the lines, and those are the solid red and green lines, and that creates your centroids. So the point of the centroid is, from the open to any point in time throughout the session, say noon, we can understand what the behavior of the call side and the put side has been. By that, we mean, is call speculation flat? Is it trending lower? Is it trending higher? Same thing on the put side, or the puts, trending higher, trending lower, or flat. And by tracking this, we can understand two things. The first being the character of price action itself. So is it choppy? Or is it trending up or down? Because remember, price flows to where the transactions are occurring. So on trend days higher, we see the call centroid trending higher. We see the put side trending higher. On down days like yesterday, we see the call side trending lower. We see the put side trending lower. Or I would chalk today up as a fairly choppy day, slightly higher. We can see the put side trending higher all day. Again, helps us isolating one side of the market, meaning we're not going to have a complete collapse like we saw yesterday. Outside of any news event that may come out. And then same thing to the upside. What are the calls doing throughout the session? And so I will get to an intraday example so you can see the utility of this tool, but something cool to recognize or that I want to hit on is you'll see these moments in the structure where we topped out today. First off, yes, this was nice to a 5,300, which is a key psychological level. Again, there's also a kind of capped level in the SPX structure. But second, what we can see is all of these transactions that took place, really from the open till noon. Once price got up here, all of these transactions, the delta of those went to 50, or effectively at the money. And so that is a natural place for monetization to happen. And by what I mean that is when price is down here, those speculators put on those contracts, and so they had a lot of out of the money risk. Basically from 5,200 to 5,300. 5,250, 5,300, but whatever it was. Once we got to 5,300, those are now effectively in the money. So, that's natural profit taking. So that is kind of a key way that we use this tool as well to kind of understand where those, points of monetization could occur. Then same thing to the downside. We got that little bit of downside. That this was a key level where those puts started to be at the money, in the money. So again, kind of a natural place where we see monetization occur. And then just see how this chart is useful intraday. So here is what we're looking at noon. And so the way that this works, remember, we produce these every 5 minutes for you guys. So again, we have the centroids of what is actually transacted from the open till noon, both on the call side and put side. So what that tells us is all things equal, assuming that call speculators behave in a manner that they have, this is the likely path of price, all things equal. And then same thing to the put side. Again, the puts were aggressively higher throughout the session, so all things equal, this is kind of the path of that centroid. And so when we put that together, we can understand that yes, price is going to be moving sideways to higher, likely, assuming all things equal, assuming no news events, no kind of sell triggers, right? So again, pairing this within the market trend model, right, of this was showing, clear buying throughout the session as well. That is kind of a powerful 1-2 punch on an intraday basis. Then right here, here's that example, fast forward half an hour, almost to 1 o'clock, we can see spot price continuing to push higher, everything indicating that we're going higher. However, we need to keep in mind that remember all these transactions that opened up here, these are now in the money. And so likely kind of spot of monetization. B, we're at 5,300. So caution was certainly advised here. And one point I just want to make real quick, like that's not hindsight quarterbacking. In the Discord, we were talking about all these factors in real time as well. The last thing I just wanted to point you guys is, at the end of the day, we stitch all of these 5-minute charts together to create this GIF, so we can understand kind of what price action did, what the speculation of Collins puts did today, and really it's just cool to see the lines of best fit, kind of how they change throughout the session, and yeah, just kind of the character of price action. So from here, certainly in the immediate term, like this was a constructive day. If you're familiar with our market trending framework, again, go to our website and read about that if you want to. Just send a newsletter on it. But this is the first stage of that, right? Like we have a linear up day in terms of the cumulative tick, saw some filtered tick buying. So next, what we want to see is in the full complex of the SPX-A and the SPX-P, we want to see call speculators start to step in and put speculators leaving the complex. We haven't seen that yet. So while this is a good start, I am still cautious to the upside. Bulls are guilty until proven innocent. So I'm still focused more on kind of just an intraday time frame until we really start to see some progression, some continuation of the cumulative stick higher, and some improvement in the SPX structure. So that is what we are going to be looking for. So with that, appreciate the time, and we will talk to you all tomorrow. Thanks. Bye.